is a Consumer of the Week link. Hey, everyone. Welcome to the Market House. I'm Maggie Lake, and today I'm talking markets with Dale Pinkert, trading coach at TradeGateHub. Hey, Dale. Happy Friday.
Yeah, great to be back with you, Maggie. Definitely felt like a long week to me as well.
Yeah, we were just talking before we came on. It was a tough one. I hope you're all feeling good this Friday. It was a tough week. It was a busy week in the markets. It was a tough week emotionally for a lot of people. A lot of crazy things going on in the world, and so I think everyone needs to take a break and take some downtime and recover. And Dale, we're happy to see you
Yeah.
back in your usual spot, ready for
Uh,
action.
yes, I left the beach. I'm back in the high desert and glad to be. There's no place like home, Maggie.
There isn't. There's no place like home. A couple of you were commenting. I'm curious what Dal was up to. The great adventure was on an RV journey on the coast, which was amazing, and speaks to your intrepid spirit, I think,
I
Dal.
I want to thank everyone for starting the charity for me because they thought I was, ran into some hard times and might be, on the downbeat. But everything's okay. And you know what it made me, being in an RV, Maggie,
Mm,
it really made me appreciate what we have and
mm,
what we take for granted because there are thousands of people not taking vacations in them, but they call that home.
mm.
And they're just looking for a place where they could park and be able to exist. So, again, count your blessings.
Absolutely. And it's a good reason for us to get out of our little bubble sometimes and go have some experiences.
They
It
wish
makes
they could have had a drawdown in their spec account
Yeah.
this week. So be grateful that you have the risk capital to be involved in this financial Disneyland jigsaw puzzle.
That's
Okay.
exactly right. That's
All right.
exactly right. And keep your priorities in mind. I love
Yeah.
starting out on that tone. Tommy Thornton's in the chat and says, "Hi. Hope you have both
Uh,
have a no."
Tommy's an eagle eye. I really respect him.
Yeah, and Cool Hand L saying Dale on the screen and Tommy in the chat doesn't get much better than that. Hey, everybody joining us on Substack. As usual, drop your questions in. We'll get to as many as we can. And if you are not following us or joining or subscribing on Substack to the Market House, do so please. It's where we are dropping some of our new stuff and communicating more frequently. So head on over there. We have a link in the chat. So Dale, interesting week. Dow edged a little bit lower today, but Nasdaq hit a new record. S&P 500 fifth winning week in a row. Another strong performance for some AI names like Micro, and it looks like a lot of folks looking for a Fed pivot now with that meeting next week. What's on your radar? What are you looking at?
Well, last week we talked about the potential for a turn in the bonds.
Mm,
So, I was talking. Here we were last Friday, and I said this could be a breakout move in the bonds, and we did have the breakout. I said it measures up to about 92, 93. So this move is in gear. We could possibly stretch up to there to 92, 93. That would be up here. And but I would look at this as a bear market rally for now. I know a
mm,
lot of people are getting real bullish bonds and real bearish that rates are going to fall to 2%, 3%. But the caveat being, and I would protect myself. You know where you're wrong now. You see a close back under 88 and a half, the breakout's negated, then you could expect, I think, the resumption of a bear market and new lows in bonds. So I'm still looking at this as a bear market rally. Um, and what gives me a little bit of pause is I was looking for 4% in the 10-year for a long time.
mm.
And that was the measured move off this little head and shoulders formation. And we're here. So we're hitting 4%. I don't really know if I want to press it. And I want people to keep in mind the last time we went through an easing cycle, that yields actually did not go down. The 10-year had one heck of a rally on that last easing that Powell went through when we eased 2/4 point eases.
Mm.
So this 4% level, I think, is important. And even the yen is kind of acting, which is correlated to rates, that rates don't look like they're going to collapse even if the yen goes to 145. So maybe we get a hawkish cut. Okay, a lot of people are talking half a point, but
Mm,
I talked to one of your guests the other day, and I don't know if you get Peter Bookvar's stuff, but he showed all a list from, I think it was from May to August, of all the price increases that we've had, whether it's tariff related or not. There are a lot of things up double digits on coffee, 28%, electronics, 20%. There are higher prices. So,
yeah.
I don't think we're ready for a deflation, especially if we're going to have more monetary stimulus. So, just something to keep in mind that I don't think we're entering the bull market in bonds yet, that this is just a bear market rally. So, I
So
wanted, yeah,
that's
go ahead.
super. I just want to jump in and flag some things to folks. So that's super, super interesting. Peter Bookvar, the book report Substack, fantastic stuff. If you're not
Yeah,
following that, please do.
yeah,
He's so good on the details and tracking this for all of us because we forget, right? Like it's hard to keep
yeah.
track of it all, but so in the weeds on that. So it's going to be a really interesting balance between the tariffs and do they start to come through just anecdotally, and I'm sure you're all experiencing, some of you may be small business owners. If you are, feel free to weigh in the chats. But a friend of mine who has a small business just said all of her suppliers just increased her prices. She has a lot of sort of beauty care wellness from Europe, and she's having to pass on those prices to her clients. She's very upset about it. And that's just one little tiny micro example. So we may start to see this come in now, especially if the courts uphold it. But I will tell you on the other side of that, which is going to make this really tricky to watch. I just finished doing an interview with Juliette de Klerk. We're going to release that next week, folks, on macro sessions. She's really watching the labor market. So we're in
Yeah.
this really interesting period where we may be getting mixed signals. Which one is the Fed paying attention to? What's accelerating and what's calming down? Going to be really tricky. So great to flag that. Dale, does it
Yeah, right
seem
now
like
they're squeezing shorts, and Donald Trump is making a lot of money on his long bond portfolio. I don't see any reason to sell it here unless it does something wrong, and that
Mm,
would be negating the breakout. What's great about breakouts is it gives you a demarcation line, a bull bear line. So if you're long the bonds because of a breakout, if the breakout's negated, your reason for being long is negated, so you shouldn't be long anymore either.
yeah. Does it feel like the market's getting ahead of itself with this enthusiasm? Because right now it seems like bad news is good news, right? That University of Michigan sentiment fell again, survey
Yeah.
fell again this month, and everyone's just anticipating that this Fed pivot and that they're going to ease and it's going to be off to the races again. Are we getting ahead of ourselves with that?
No, but it is very rare for the Fed to start an easing cycle with the stock market at all-time highs. I
Mm,
think it's only happened a few times in history, maybe two or three times. And a year down the road, the market's doing better. I'm looking for 7,500 in the S&Ps, but I think that we're within a day or a week of a top. My bet is that we'll see 6,000 before we'll see seven. And this is a teachable moment in the S&P. So last week, I believe, let's count back 5 days. So I thought, let's see, 1, 2, 3, 4, 5. Okay, so we had this negative day here, and a lot of people were looking at this rising wedge. Okay, this is what's called a throwover, which when you're short can make you want to throw up. But there's a way to trade it. It's almost like a breakout level that you let it do whatever it wants to do above the wedge. But once we're back inside this formation, which looks like 65, 70, I mean, really not that far away, 65, you'll see it on your chart. That's a sell signal. And then you put your stop above whatever the high was during the throwover. But if we start trading back under here, the wedge becomes active again.
mm.
And should it become active, there are all kinds of targets. 6,200 is where this rising wedge line starts. And there's a lot of important stuff right here at 65 and 480. But I still think there's some type of correction coming before we melt up to 7,000. And I don't think we're that far away in time or price. There are lots of things happening besides the Fed the week after. We have a change of seasons, which is something that Gann followed. We're also in eclipse season. We're going to have a solar eclipse. And I've seen some pretty nasty action during solar eclipses. So I'll just wait for the signal and the market to take out this wedge line and give me a trigger to do it. But I again, I wouldn't have FOMO up here. But what's happening with the Fed easing at this, that's going to be the jet fuel, is going to be lower rates. But I just think that you have to be careful down here at 4% yields, because we could have, there are some people saying that this is just a big triangle formation here, and we're still not below this low that we had in April. And I know people looking for us to trade up towards 475, break out, and go to 5%. So, keep an open mind. And, when a market hits your objective, look for reasons to get long. And people know my major tool is RSI, and we're starting to get some divergences developing here on the 10-year yield down here at 4. So don't get too bulled up about interest, about notes, about bonds. Maybe they'll like it if it's only a quarter, because the market really does believe the Fed is way, way behind the curve. That's why I believe, some of the people that you're talking to are looking for a half next week. I don't think we get a half, and maybe that's going to be the disappointment. A real shocker would be that he does nothing.
I wonder if that's that. I think that the probabilities of that are
zero.
I never like to say zero, but I think that they're pretty low. I think, like that would be, because it would just seem, given the data that's been coming in a couple of weeks ago, I certainly think that was the thinking. But yeah, I think
he's had a kumbaya moment with all the revisions in the employment. And I've heard people saying he's doing it because he could. But if Peter Goodburn, if Peter has these numbers about inflation, do you think that Powell doesn't have these numbers as well? Peter Bookfire, I'm talking about.
Yeah.
So he might be more cautious than the market is thinking he will be.
It's a tricky one, I think. And again, a good call to mention being cautious, because we also have the political pressure on now. So, that's, even though they'll say it's not coming into effect, they're probably walking a line between that data, that mixed data, the unknowns, and politics. So not easy to be on the Fed board this summer. By the way, this meeting rather. By the way, I think it's always, remember that we get the decision and then we get the some of the details that come out and the projections and stuff. So I think all of that is going to be super important. If we see a correction, does it feel like it's going to be some of these high flying tech names in AI, NASDAQ, that leads it, or could this be pretty broad based?
I would go with the indexes, because it's right now there's so much rotation. It's pretty difficult. I mean, Nvidia is not at a new high. We have the second lower high in Nvidia. We're not that far away from it, but we're still weeks away from the high. We peaked back in late July at 185. So this could end up being the second or third lower high. It's got to hold 174. That opens the door. Under 174 will open the trap door.
That'll be easy for everyone to remember. Thank you for making it easy for us. Our brains are tired.
And there are certain stocks that have been distributing for a long time. I've been watching Uber. What have we been doing for all of these months since we had the first 3 drive? I got bearish back here because I was looking at a 3 drive to a top. Then we had a throw over. Then we pulled back. And now we're about to make a new high here.
Mm.
But it's not going to confirm on a lot of different time frames. And, some of the, I don't think Amazon hasn't made a new high. That's not a great looking week. Apple started coming off this week, maybe 240s capping it for a while. Netflix has been a disaster. That looks real ugly. Looks like we could trade down to 1,000. So there are some candidates. Palantir's rallying, but we're not at new highs in Palantir either. So this too could be a fade and have one more wave like this. So there are some chinks in the armor of the S&Ps for a correction. I think I'll go out on record and think that we could even see 5,600 in the S&Ps if we get the kind of top that I'm looking for. But that's my bet, under 6,000 before we're over 7 in the S&Ps.
So let's talk about another couple areas that you mentioned to keep on the radar, and one of them was grains last week, and we really, I haven't had anyone talking to me about that.
Good.
How are
That's
you?
great.
Yes,
that's great.
How are you feeling about that?
I feel corny. My jokes are so see, I just proved it on here. So I've been talking about a low in grains. Corn keeps confirming it. So what do you do after a move like this? I'm not a big believer in chasing anything. So maybe you just let the cycle go and buy a pullback. I wouldn't just launch here, but I think we have serious potential of a bottom here in corn, especially if we clear 450. I mean, here's where we were at on the invasion in Ukraine. And, I know some people are hoping for peace in Ukraine, but, I've read and seen experts that say that Russia wants to retake Odessa. And what's Odessa? Odessa is a major port for Ukraine to get all their exports out. And a lot of that is grain. Also, in the breadbasket in Ukraine, which is a huge one in the world, they're suffering like a 25% drought. So there are weather problems there too. Plus, everyone hates grains. They really hate beans because China hasn't bought any beans from us. They're buying them from Brazil, but that doesn't stop the price from going up. We clear this $11 level, then we're looking at 12. They all look good. The weak sister has been wheat, but even wheat, they tried to take it lower this week and break the lows, and we have a good close. So yes, I like the grains, and I think it's embryonic.
Okay,
put that in your inflation pipe and smoke it.
It's
and you funny. Can't eat gold.
No, you can't. Even though sometimes people try. It's funny that I thought of you this morning and mentioning grains, putting it on our radar last week, because there was a whole story on morning news about how food prices are going up. Yeah. And it's the first time I've seen that in a while. And I thought, I bet, I'm remembering back to Friday when Dale was talking about this unloved sector that no one's been paying attention to. So,
yeah. So, and these are depressed. So it really hasn't contributed at all to the inflation we have now. We have a bull market in grains that's going to filter into everything, kind of like oil does, into all food products, and also used for energy, soybean oil, corn, ethanol. So, the grains, grains look pretty good. The other thing before we forget, because I know a lot of people are massively bullish after the run we had, and I once asked Tommy about this, and he said, I wouldn't even think about this or consider them, but it's the cannabis stock. So I told people to wait. So this was last week. So if you've waited, You already saved yourself a buck. This is the ETF. I think there's a possibility that maybe some doubt comes into this. Looks a little bit like a Head and Shoulders top at 450. We could get this ETF down to 3. I would try it at 3.
Mm.
So this was I said be patient, wait. I think you're going to get a real sharp break. Maybe it comes on some disappointing or some fear of maybe rescheduling's not happening. Maybe it's too busy, but I think this is a break you buy, especially if they really get to them down here.
Yeah, very, very interesting. And I'm going to just remind everybody, Dale saying being patient now, but you were one of the first people in a
Down
lot of
here.
the stuff that I listened to be looking at cannabis again and flag it to us. And then, man, it took off after that. So that was it.
Yeah.
That was a huge rally. But as usual, you're always revisiting things and looking at them. I think that's a great lesson for everybody. Don't just set and forget, keep your eye on this. Tommy said, I'm long nat gas. I know, Tommy, we're going to run a clip of you. So when Tommy was on with us earlier this week, we were talking about what area do you see opportunity, because he is also kind of concerned about some of the valuations, the stretch valuations, especially in tech and AI, mega cap tech. And he mentioned nat gas. Let's have a listen to that.
Okay.
Is there a sector that you like, or something you feel is out of favor that you're kind of thinking about, even if you don't have it on your books right now?
I started buying a few natural gas ideas, and I think natural gas, the commodity is pretty washed out, and it's really unbelievably, it's abundant, obviously, for the price to be this low, but I think it's really essential going forward. And I just recently started to buy some natural gas ideas. I have been a long buyer of a company called Golar, which is a floating vessel natural gas extraction company, and they're leasing out vessels for 20 years, and the valuation is just incredible. And there's a lot of real smart people that I know that are involved in this one, and it's been a big winner for me. But it pulled back today on some Argentina news. I think it's a buy here at around $40. I think the stock will be 60 sometime early in 2026.
So nat gas is, thank you, Tommy. Nat gas was something, again, Dale, that you flagged a while ago as something that was kind of left for dead and that you were keeping an eye on. How are you feeling about the price action? Is this something that you're still watching, or do you think that there's going to be movement?
Yeah, I think that this is a break to buy. Any market could, from oversold levels, can generate a rally. It gets shorts to cover, have kind of a bounce, but the pullback and putting in a higher low for wave 2 or just a higher low is really where the rubber meets the road. So we've pulled back a little bit more than 50%. Maybe we try the 280 level, but I still think that you buy. I'm an energy bull. Even crude, even if they take crude down to 72, I want to talk about what's happening with tariffs, and China may retaliate against Mexico as we're trying to get countries, we're penalizing them for buying Russian oil. And I think that's just one aspect of the energy story. Has anyone seen a peace deal between Iran and Israel and the United States? I know I haven't.
Mm-mm.
Okay, so what I think is happening now, and I don't have any idea of a when, but to the whole world, Israel has become the pariah state. And it's very, obvious after watching what's happened in Gaza, and then this recent airstrike. I believe it was in Qatar to take out negotiators, that Iran is going to be the country that strikes first here. And when I look at something like, so I like natural gas, it has a little better structure than the oil. It has, it had a nice advance, so you have a cushion. I'd buy pullbacks around 280. You're wrong at new lows, right? Because if you buy a pullback because you think you have a market bottom, if it takes out the low, you don't have a bottom. You have to reassess. So you'd like to get long as close to the low as possible, as long as it's not beneath 78.6. That's as deep as I'll buy retracements. So I like this, but you guys recall that I was an oil bull and USO before the last activity in Iran, our airstrike. And the whole world is bearish, the WTI. It's very hard to find anyone that's bullish. And then I look at this, if people recall my work, when a market confirms a high, there's a probability that's not the high, because markets rarely peak when price is being confirmed by momentum. So far, all we've done is pull back halfway. You could call this a descending triangle, which is a bearish formation that, if it turns out to be a bear move, would measure, back to about 60. Okay, because you have about a $12 range here on the triangle. But what I think may happen is, even if we may not get a breakdown, we were up sharply today on that Chinese potential retaliation against Mexico. And if we ever take out 78, your first thing would be taking out today's high would be bullish. But over 78, you're looking at $100 crude based on having a $23 rally from here, tack it on to 78, that gives you $100 crude. So you were talking about the consumer. That's the one thing the president is still proud of talking about all the time, with other prices going up like beef and everything, is that gas prices have come down. Almost every recession, if we're going to have one, has happened with an oil shock. I've talked to people who said geo doesn't matter anymore. Geopolitical risk doesn't matter anymore, because it only used to matter because of the price of oil. So there's so much complacency, and there's really no risk premium in the oil market. It's relatively cheap when you think about how the dollar has declined. So I wouldn't be short crude. I'd be looking for reasons to buy it. 69.5 is 61.8 back. So just like the other formations I talked about, say, for example, we break down and we go to 69, and you don't want to be a hero. People say, Dale, you like to hear the ice crack. So I take shots, trying to get the edge and on a turn. But you could be conservative and wait after a breakdown that the next time we're above 72, you have a buy signal. And look at how important 72 is on the weekly. You have all of these moving averages converging right here. This is a 50-week and 200-week. So this is a pretty important area. And right now, it just looks like consolidation after a straight line move. So don't get too bared up in the energy sector.
Gosh, your spidey sense is crazy, Dale, because we had questions about oil, even though I didn't ask it. So Mayo, I think that nicely answers your question. And I was literally just pitched someone to come on, and I'm going to have him on, who said everyone is bearish oil. And it was, and he also was really surprised by that. And so, of course, what happens? We didn't even discuss this at all, and you roll up and say that. So
and I think there are record short positions in the COT. I think they're the large specs or commercials. So there's plenty of fuel. The public's still a little bit too long, but there's lots of fuel for short covering if we get going. And this is the USO. Over today's high is going to be a pretty good signal.
That's amazing. Let's wrap up with gold. And Marvin on Substack said, so you can eat gold. According to Food and Wine, gold is safe to eat. I think they're thinking of those little fancy shavings. I don't even get to go to those restaurants. Too high flying for me, but we all know we've seen them floating in the martinis and stuff. So thank you for that, Marvin. So we can eat it, but not for the reasons that Dale was talking about. But we have. So interestingly, as we've seen stocks rally, we also see this sort of relentless move in gold. We've talked about it. I want to play a clip from Tony, who was on earlier this week as well. And he was talking about momentum in that space. Let's have a listen.
We had this great leadership with gold miners, uranium miners, industrial miners, the three best performing sectors of the S&P that I watch, right? All these big industrial sectors. And now you've got tech catching up because rates are falling. Nothing has changed about the metal trade. There's no offer right now in gold miners. There's no offer. There's no seller. You can't buy them at any price. You wake up every day, they go up 5%, and that's it. I never thought I'd see the day, but that's what's going on. And I've got to respond to that. So with all of these positive stories in the market, like you're not going to catch me getting bearish. And then you got sentiment, Maggie. The most important thing to me, if you want to worry me, tell me that sentiment is pinned at extreme greed for weeks now. If that happens, I get worried. Where is sentiment right now with the S&P printing the all-time high? CNN fear and greed this morning was 51 neutral.
So Dale, how are you feeling about the miners? I mean, we've all seen the action in gold, but what are you looking at? Because I know you track miners.
Another sharpshooter, that guy. Last week I talked about having a target in the physical of 3480, right? So the high that we had, I don't think I'm presenting right now, am I? Do you see any charts?
Oh, no, I don't.
Okay, so let me share the screen so we could get the miners up there too. All right, so first here's gold.
For some reason, I don't see your chart. I think.
How about now?
Oh, nope. It's all. Oh, wait. Okay, now we do.
There it is. Okay, so I had a target of 3680. The high was 3674, close enough for government work. Yeah, I can't argue with Tony. It's a raging bull market, but I think you could get a correction in gold. This is going to be a pretty important area, 3600. We get through there, that opens the door for, maybe 34. So it's hard for me to commit new money up here. I know what he's talking about in the gold miners. Let's use Newmont as the poster boy. And we're diverging up here. So momentum is starting to wane in Newmont. As you could see, this is a 4-hour. We had confirmed highs here. But this last wave up, momentum is not confirming. I'm not saying we can't make a new high, but I think if you're patient, there's a possibility of 76. And then if the gold correction really gets going, which no one thinks it could, you could be buying a pretty good pullback in Newmont back towards 68. But that's going to take a turn in the dollar as well. So again, even though and this is what I would call pretty close to parabolic, this move. So I'm not a big believer in chasing parabolic moves. Oh, and here's that 68 again. And this would just be a moderate correction in the gold. So don't get FOMO.
Don't get FOMO. Boy, we should just put that on a billboard because across the board and not just in gold, because it's what sinks a lot of people.
And if it goes without you from here, I guarantee you one day you'll be able to buy it cheaper than $80. and what you do is you just look at your right at a sign that I've told everyone to put up that says the word next.
Great advice. Move on. Great advice.
Dale, as always, so fantastic. We love the residency. It's really fun to track things week by week because so much is happening right now. And we're going to have another blockbuster week next Wednesday with the Fed. So all eyes on that. Fantastic stuff. And for everyone, we were talking about the conversation around peace. Be sure to check out my conversation with Michael Cow. That is on Substack. Michael's also, I think worried about all the same things we are. And I had to add something to it because it felt almost odd to be talking about the possibility even of a peace black swan. But that's exactly when you talk about things and explore your framework when the most unlikely seem true. And it certainly seems this week we're a long way off that. So hopefully we're all proven wrong. But really interesting conversation. He talks a lot about the reverse, what he calls the reverse Marshall Plan too, which is super interesting. So dig in, and if you disagree, leave your comments. We'd love to begin a conversation about that. And Michael's sure to chime in on Substack as well. So looking forward to that. Thanks, everybody. Listen, enjoy the weekend. We all really need to take a moment and take a break and exhale. So I hope you get to do that with your loved ones. Dale, great to see you back in your spot again.
Thank you, Maggie. Don't just count your pips, count your blessings. See you next Friday.
Fantastic stuff. Thanks, everybody. Take care and good luck out there.